With some key retail names out with results this week, we're looking at how the trade war has hit the sector. Courtney Reagan joins us with more on that. Hey, Court.
Hi, good morning, Will. So we know the retail sector has really gotten rocked from the trade war, but initial sell-offs haven't kept valuations depressed for all retail names, which does make some sense once calmer trades prevail, because not all retailers are going to be hit equally as hard. In fact, some near-term floors may have been put in for some names. So let's look at this. In early May, the retail ETF, the XRT, took a really big leg down after the trade talks between the U.S. and China broke down, and those List 3 tariffs increased from 10 to 25%. The XRT then started to rebound in early June, only to fall again a week ago when President Trump said a 10% tariff would be levied on List 4, or that final $300 billion worth of Chinese-made goods, on September 1st. The XRT is down 11.5% since that May 3rd high, since before that escalation began. But a number of retailers are actually higher than that previous high on May 3rd. So perhaps we've seen a near-term floor in some of those names. Let's look at them. Costco up another 12% from before the trade talks broke down in early May. Ross Stores up 9.5%. Dollar General, 8%. Target is up 7%. eBay also up 7% from those May 3rd highs. Walmart higher by 6%. But many retailers will be reporting earnings this week and next, and investors are going to be hyper-focused on the commentary about tariff risk. Macy's reports Wednesday, and last quarter, CEO Jeff Gennett told me if tariffs are levied on the remaining $300 billion of goods, which is now happening, it, quote, would really impact our categories. It's not in guidance, and when you do the math, it's hard to find a path through that wouldn't impact customers, meaning higher prices.
To be fair, though, Courtney, we have had that kind of rhetoric from retailer management throughout this process,
You're right.
and it hasn't really hit so far. This is more specific on their sector, though.
So because of this, List 4 is very focused on these consumer goods like apparel, shoes, electronics, toys, things that we haven't seen yet. That's why the fear really ratcheted up. And that's why you saw these big sell-offs where all the retail stocks go down. But then when you think about it and you do your homework, you look at a name like Tapestry reports this week. They make less than 5% of their handbags in China. They shouldn't be selling off 5% every time there's another tariff escalation. That's just going too far.
Every time the Chinese weaken the currency, it offsets the tariffs, too.
And
it doesn't impact the bottom line to the same degree.
That's another good point. Right. And so all the retailers are going to be different. We talk about Walmart a lot. Yes, it's the world's largest retailer. But they tell us, look, in the United States, we only import a third of the merchandise. And of that third, some of it is China, but not all of it, because there's such a big seller of grocery, and so much of that comes here from North America.